Rupert Mitchell is an intentional investor out now, Epsilon Theory YouTube. You're going to love this story. The squirrel is hanging out with me, Rupert Mitchell. Hospitality and investing banks. Pretty wild. If you don't know about his restaurant history and his family, this is a great through line. We talked about building capital markets businesses from Casablanca to Calcutta. This guy's seen all over the world, built all sorts of remarkable desks up. And we talked about why Bob Geldof's band, From Here On Out to the Squirrel, is the boomtown. Ratatosk's, yes, Norse mythology even makes an appearance. Jack Forehand, let's roll some clips.
If you think fundamentally that every job on the planet is sales, waiting tables is a pretty good preparation for pretty much any job on the planet. It certainly jumps off CVs when I've done recruiting in the past. Someone that's bussed tables, someone that's bartended, really can do sales. I sort of fell into doing emerging market stuff in the London time zone. So Cairo, Istanbul, Route, Amman, Casablanca. It was all sorts of, the mid 90s. There was a sort of a massive M boom going on. And I got to do some really exciting things. I mean, in those mobile phones, we were just starting to use them. They certainly didn't roam. Forget about BlackBerries. And I remember being, in my mid-20s, being sent off with one colleague and a couple of corporate attorneys to go and figure out how to take an Egyptian bank public. It's pattern recognition. Ultimately, it's really, really difficult to see the wood from the trees when you're dealing with competitive pressures. Oh my God, is Morgan Stanley going to win this one off us? It's very difficult sometimes to get perspective. I've got all the time in the world for perspective these days now, which is fantastic. I reveled at being a specialist for a few years, LARPing as a car expert, but I actually love being a generalist. I celebrate generalism. And last weekend I was writing about feeder cattle. The previous weekend I was writing about SaaS companies. I was looking at the weekend before that, I was looking at rice combine harvesters in Japan. I love going anywhere. And I do think that bringing fresh eyes to new situations often gives you an advantage over the people that are in the same sandpit every single day.
Welcome to The Intentional Investor with Matt Zeigler, where he and his guests explore the intersection of investing and life, portfolio and purpose. Nothing in this podcast is investment advice. Nothing in this podcast is advising you to buy or sell any security or to do anything with your money. Seriously. You should only act on investment advice from someone you know and who knows your unique situation. We are not that person. Matt Zeigler is a managing director at Sunpoint Investments, and the opinions expressed on this show do not necessarily reflect the opinions of Sunpoint Investments or of Second Foundation Partners. Securities discussed in the podcast may be holdings of Sunpoint Investments.
You're watching The Intentional Investor right here on Epsilon Theory YouTube. I'm Matt Zeigler, and this guest today, now I am sure he's expecting a long and tedious exploration about how he's 1/3 Sandy Cheeks, SpongeBob, 1/3 Rocky J. Squirrel, Rocky and Bullwinkle, and 1/3 Slappy Squirrel, Animaniacs. But he's a classicist. And you may not know this. I know this about him, and I'm not going to do him like that. Because I don't want to turn around to a guy who wrote a career risk essay filled with Greek mythology and Wagner and Debussy, and now I'm messing this up with some, now that's comedy line. I had to get one Slappy Squirrel reference in there just for posterity. So I'm wondering what I'm going to do. And my wife and I, we've got our nephews staying with us lately. So I've got 3 young boys in the house, which means I'm on bedtime stories. And what does that mean in my house, except the kids are being subjected to Norse mythology? Because come on, a one-eyed god riding his 8-horse beast over people with arrows sticking out of their heads. You're not going to get better than that. So unbeatable. So I'm going through my Delaire's selection and I'm looking at this and I come across this absolutely remarkable little character here, Ratatosk. And I'm thinking, I know when I'm going to use this story because Ratatosk is such an interesting character. So you have the tree Yggdrasil, that basically the Aesir They live so long as Yggdrasil, the tree, stands. At the top of the tree, you have this eagle, and down at the roots, you have this dragon. And then you have Ratatosk, whose job is to carry messages up and forth down the tree between the eagle and the dragon. Now, the thing about the eagle and the dragon is they hate each other. And so they're hurling insults. And it literally says in the book, it literally says that the squirrel's job, according to the Delayers, is to carry abuse back and forth between the eagle and the dragon. And I'm thinking to myself, now what squirrel do I know who would love to carry abuse between the eagles and the dragons, or, between traders on either sides of the trade, investment bankers on either side of the deal, or whatever else. And I go, I've got just the guy who knows how to find the extremes, pick a little fight, have a little fun along the way, because as they also say, conflict and mischief are part of life cycles and the search for knowledge. This guest knows it better than most. Calling in from the land down under, the Ratatosk of markets, Blind Squirrel Macro founder Rupert Mitchell. Welcome to The Intentional Investor.
Oh, Matt, that was amazing. And you know what? I love perplexity. I think I said I asked Perplexity yesterday. Matt is going to find the most arcane squirrel reference he can find, and it prepared a list for me. Guess what? At the bottom of the list?
Did it have Ratatosk? Oh my God! This is fantastic.
That is so good.
I was looking at my Perplexity search of all the different squirrels, and then literally was reading a bedtime story last night. It was like, wait, how did this not trigger yet? This is perfect. Well, thank you, Perplexity.
Amazing.
So much fun. And Norse mythology for kids. I mean, I heavily endorse it. If you're not doing this at home, Rupert and Matt Zeigler are here to sign up.
I am underserved in Norse mythology. You've just added to my to-do list.
I'm going to get you a copy of this book because while animated and directed at children, there's something about Delayer is just magical part of childhood. But we're not here to talk about them today. Maybe somebody was going to animate this version of your story. I have so many background notes and questions. And not just the fact that I know we have this Spanish and French literature major. Like, forget all the finance stuff. I got to go way back. So where are you? Where are you originally from? Where are you born and raised? Give me that first. Let's go right there.
I'm a London Scot. So I grew up in London. London in the 1970s.
London in the 70s. Who are you named after? Is Rupert a family name? Is it?
Do you know the book Prisoner of Zenda? My mum's a romantic. I'm Rupert of Hensar.
That's amazing. What did mom and dad do besides be romantics and raise romantic?
So, my dad was he was an army officer, and actually he was on active service the last time things kicked off in Yemen, in the Aden crisis. But by the time I'd born, he'd left the army, and he was publisher. And in those days, you could be a publisher and send your kids to private schools and things like that. Things have changed. My parents got divorced when I was 9. Both ended up happily remarried. I lost actually both my father and my stepfather in the last 5 years, sadly. But my mother and stepfather were in the restaurant business in the 80s. And actually, prior to the restaurant business, my stepfather had been a stockbroker. And he was incredibly cynical about the finance industry. He used to talk about. I remember having a conversation about the independence of equity research about the time of, the Elliott Spitzer. What was it? What customer number was he? I can't remember. Anyway, about the time of research independence, sort of in around the noughts. He used to tell a story about the trading floor back in the late 70s, where the sort of head of sales would shout at the one analyst. In those days, analysts were not rock stars. He'd shout at the one analyst sitting in their cage at the corner of the trading floor saying, "Jenkins, I need a buy note on ICI."
Oh God, I need a buy note. Yeah, Jenkins.
Would scribble off, write down a few bullet points, come back, put it on the head of sales desk, and go, "No, you idiot! I meant to sell note." Yeah, it's one of the days of research independence. Anyway, but anyway, so my dad had nothing to do with finance. My grandfather was a really interested sort of value investor, stock picker type. This is my mum's father. Actually, when I went into finance, my stepfather's father had been a very senior corporate lawyer, and I started life as an investment banker, and he really couldn't get his head around the concept of charging fees for advice. M&A advice was the common sense that corporate lawyers would just give their clients for free. And so actually I grew up in a pool of cynicism about the industry that I joined.
Well, why not start in a pool of cynicism when you're just going to find yourself in there
It's
anyway?
the best place to start, to be honest.
Okay. But the stockbroker to restaurateur, I've got questions about the acorn seeds in his life that he's planning here. How's that happen? Is there any story to this? How they end up in the restaurant business?
Listen, they always wanted to be. He always wanted to have his own restaurant, my stepfather, and actually they ran a really successful restaurant in the 80s. I mean, this is where sort of Lady Diana Spencer had her hen party. It was a sort of it girl Chelsea restaurant in the 80s. A lot of the sort of the age of the celebrity chef was sort of spawned in the 80s, and a couple of them cut their teeth working at that restaurant. So it was really interesting. Actually, do you know what? If you think fundamentally that every job on the planet is sales, waiting tables is a pretty good preparation for pretty much any job on the planet. It certainly jumps off CVs when I've done recruiting in the past. Someone that's bussed tables, someone that's bartended, probably can do sales.
There's a different level of training that happens on the floor of honestly, on the floor of a kitchen, on the floor of a restaurant, on the floor of a bar, any of these places. Did they have you working?
Kitchens are terrifying. Kitchens are utterly terrifying, because that's where they keep the wild animals. I mean, head chefs. I mean, that's all been brought out into the open by all of these documentaries about celebrity chefs screaming at their sous chefs and commis, and bottle washers. But it's there are knives in there and hot saucepans. You just don't want to upset the chef.
Do you grow up working in any of these family businesses, or just aware of them by the stories?
So I occasionally worked in my parents' place, but actually that was just kind of awkward. So I tended to go he had plenty of mates in the business, so I used to go and work for work at his friends' restaurants in the area.
They'd be, I'll employ him for a little while. Send old Rupert over and we'll take care of him.
Yeah, exactly.
Okay. And then what about so you're growing up, and this is all in London? Does the family split up and take you away from London? You stay in London?
Yeah.
Okay. So it's a full-on London upbringing in the 70s. And what are you getting into? I know this is careening towards you have this interest in literature, but what are you into as a kid? What do you like to do?
Well, it's the 70s. We were really good at being bored, right? So London. So it was London with a lot of Scotland, on those long holidays, we were all kicked out of the house at 8:00 in the morning after breakfast. The door was locked behind us, and we weren't expected back until lunchtime. And same thing again in the afternoon, rain or shine. But it's you just learn how to amuse yourselves. I mean, it's my constant gripe these days is that no one under the age of 25 knows how to be bored.
It's a real gift to actually remember how to be able to stare at the wall and wonder why the clock is ticking so slowly and that you won't die.
Yeah.
You won't die. music kid, book kid, just running around outside around the city? Like what's actually pulling your attention and holding it? What are you filling your boredom with?
Well, people wrongly call the 70s the decade that taste forgot. I mean, there was so much interesting going on in the 70s and 80s culturally. And
especially in London. You had some real scenes going on in London, really.
Listen, the 70s was my single digits. I was born in 71.
Right.
Really, it wasn't until the 80s that you could start, going to concerts at Brixton Academy or, various other things. I mean, like all teenagers, went through sort of various pretentious phases. One sneered at the music that was coming out in the charts at the time, and were constantly going to the record shops to sort of leaf through the vinyl that was popular a decade before, and all of that sort of that indie goth phase, intrigued in the teens, but then one finds herself looking back somewhat sort of yearningly at the poppy stuff that I was ignoring at the time.
This is part of life. Embracing that.
I love 1980s synth pop now. I was quite snippy about
a lot of Yaz in the collection. Who are the favorites? Give me at least a couple of musical references. I'm going to this degree here.
I was albums like sort of Alphaville's Forever Young. Do you remember?
Great song.
Sort of big in Japan. I was really grumpy about it at the time, but I was thinking, oh, no, it's actually really great.
It's a really great song. Really great sounds too. Okay, so where's the literary interest coming? And the spoiler is that you go to school and you get this literary degree, but how does that happen? This can't be an accident.
Well, ultimately, so I did languages so you get to specialize quite early in the UK system. So by the time you do your A levels at this is 16 to 18, you're down to 3 subjects, right? And you can give up. I mean, I gave up all the STEM subjects at 16. I ended up doing French, English, and Spanish from 16 to 18. And the great thing about, languages is that if you got your head around speaking it, that was, 60% of the course done. And then the balance was just reading books. And so actually, the last 2 years of school and 3 years at university was just reading literature, writing your thoughts on them was in essays was the exam test, which is kind of fun.
It's a ton of fun. I'm right there with you. And
the great thing about it is, to be honest, it isn't necessarily a handicap in terms of what you choose to do next, because it really wasn't until the last decade that within the UK there was an embrace of the vocational degree, right? Didn't matter what you could do a degree in contemporary religion and still end up on the sales desk at Goldman Sachs, right? And in fact, actually, I mean, we can get to that in terms of how I got into finance, but actually, the first firm I joined almost made a point of not hiring finance or economics majors. They didn't want anyone coming to finance with preconceived ideas on those topics. They just wanted fast learners and salespeople.
And I think, so like the Robert Hagstrom-ism, the investing as the last great liberal art, and this idea that you actually have to learn to consume something, think about, and then reflect, do something with it on the other end. You don't practice that if you're just building economic models. You do practice it if you're studying comparative religions, It's a weird transferable skill. So then how the hell do you end up with a finance job Was it ING first or mergers and acquisitions?
Well, I mean, it was Barings. It was Baring Brothers and Company Limited.
Sounds like a big one.
Yeah, which I joined in September of 1994, and they went bust in February of 95. That was the Nick Leeson selling Nikkei straddles on Cymex in Singapore.
Who introduces you? Like, what's that leap though?
So I had done an internship while I was at university. I had done an internship at a London stockbroker called Cazenove, which is now part of JP Morgan. It was a very blue-blooded stockbroker. And I mean, yes, I spent a few weeks in the European equity research department there, and being sent off to get price charts from the one data stream machine that sat 3 floors downstairs. I think I got a sort of a vague notional idea of how to read an annual report, and then went back to drinking beer at university. And then in those days, I mean, the banks used to come to the universities to recruit in the milk round, and they used to they used to sort of hold a drinks event in the one 5-star hotel in the university town that we were in, and it was free drinks, and so everyone showed up, and occasionally someone would say, you should really think about making an application, and you find yourself sort of applying for jobs because plenty of people around you doing the same thing. And so I slightly sleptwalked into it, to be honest. And I got a handful of job offers out of the milk round, and I chose Barings because I like the idea of doing emerging markets, and specifically because I was reading French and Spanish. I wanted to do. I fancied the idea of being a Latin American corporate financier, and Barings had a big Latin American franchise. The LATAM corporate finance team was based in New York in these really swanky offices just opposite Barney's in Midtown, and I was going to be the Englishman in New York and marry an Argentine heiress and own a massive estancia down there, and that was I had my life all mapped out at 21.
I mean, it makes sense. You got the literature telling you that it's all possible.
Anyway, so that's why I ended up in Barings. So funny enough, I'm not quite sure how they chose me, but I mean, they hired a lot of linguists. They hired a lot of non-languages majors on that principle that I was talking about. We'll teach you guys the finance. If you're doing languages, you can communicate with a greater subset of clients, and we'll just take the raw material. But ultimately, I think I'd used a computer once to type up a dissertation before I started working in a bank.
Yeah.
Right.
And to be fair, mid-90s when you start working there. So it's not like.
Yeah.
Yeah.
And so that was 94. We went bust in 95. The Dutch post office, ING, bought us for £1. I mean, when you think about it, the numbers are so extraordinary. The hole in Barings' balance sheet in February of 95 was 400 million sterling, right? 200 plus year old bank just going out for a number that would, that's 400 million sterling is a subscale hedge fund these days. It's kind of ridiculous when you think about it.
Yeah.
And I don't know how we all went through this sort of frog boiling exercise where digits just got added to all of the numbers while we, when I first started doing capital markets deals, a $50 million fundraising was a big deal, right? You're pretty excited about a $50 million equity financing. Now a trade will sort of flip you for it.
Yeah, exactly.
So my big Latin American dream didn't survive 18 months because while I was still sort of being a sort of junior trainee in London, Deutsche Bank, or Deutsche Morgan Grenfell as it was known then, did the most extraordinary thing. Literally over one weekend, they didn't acquire anything. They literally stole Barings' entire Latin American business. Now, this is bankers, salesmen, traders, research staff across 13 countries. I think it was like a team move involving about 130 people in 12 countries, literally over one weekend. Not a penny of goodwill paid to the Dutch post office. But that was my ship and my Argentine heiress. That disappeared over the horizon. And so, I had quite a canny boss at the time. He realized that, he's probably wondering what happens next. But they kept me busy, and so I sort of fell into doing emerging market stuff in the London time zone. So Cairo, Istanbul, Beirut, Amman, Casablanca. There was all sorts of, the mid 90s. There was a sort of a massive EM boom going on, and I got to do some really exciting things. I mean, and in those days, mobile phones, we were just starting to use them. They certainly didn't roam. Forget about Blackberries. And I remember being, in my mid-20s, being sent off with one colleague and a couple of corporate attorneys to go and figure out how to take an Egyptian bank public. And we were a bunch of sort of 20-somethings who could get meetings with the head of the Capital Markets Authority at a moment's notice in Cairo, but we were totally unaccountable. We communicated once a week via a prearranged telephone call with the boss in London. But otherwise, we just sort of went off to figure it out, and came back a few weeks later with a suntan and a half-written prospectus, and took it from there.
So you're getting to travel for all these things too. So you're getting to start to see, like, you're getting sent to Cairo, you're getting sent to these places, you're getting some. You're not your Argentinian heiress, but you're getting some exposure.
No, but it was amazing, and we used to sort of sit on the emerging markets team. Used to sit on the same floor as the somewhat po-faced UK M&A bankers, and we used to be sort of, no one did wheelie bags in those days. We had our suit carriers over one shoulder and our golf clubs over the other shoulder, and we used to wave off to them and say, well, we'll see you in a couple of weeks. I'm going. We're jetting off to the emerging markets to do something fun. Good luck merging those extruders companies in Halifax. It was really good fun, actually.
I can only imagine that had to be a ball. Where's that job take you? So now you're having some success in the sense of you're getting some deals done, you're getting to travel. So did you just not want to do it forever? What happens?
This was keeping me busy through the 90s, and we were doing in those days, Indian deals got done out of London as well. So it was well, I guess you can think about sort of Calcutta to Casablanca in terms of time zones. We were doing a lot of Russia and Eastern Europe at that time. The wild East was going on, and then of course we got 98 and the Asian crisis and all of the Asian contagion that took off, and actually it was the Asian crisis that took me to Asia. In 98, when well, obviously you had the all the books being written about the Thai baht and things like that, but eventually the vigilantes had a go at the Hong Kong dollar peg, and in protecting the peg, the Hong Kong Monetary Authority, Hong Kong Central Bank, in a gangster move, ended up buying 10% of Hong Kong equities. And I mean, the actual process was even more gangster than that. They effectively sort of they squeezed the shorts from both directions until they really squeal. But as an end result, central bank owned 10% of the equity market, and in 1999 they hired 3 banks to help them figure out what they should do with it. And if I thought I was buccaneering in London in the 90s, the Barings boys in Hong Kong, where they were charging around, opening up new markets in Asia and Southeast Asia, they were that on steroids. And the idea of working for the Hong Kong Central Bank in a sort of privatization style project, which is, in a way, so the Hong Kong civil service was very much sort of modeled on the UK civil service. It was lots of meetings and memos and things like that. And the team in Hong Kong thought that sounded like the idea of utter misery, and so called up London and said, we need someone that's worked on privatization projects, that knows how to write a memo, who can help us with this thing. So, the HKMA hired, 2 nostalgia hires. They hired Barings, because even though we were by then owned by the Dutch Post Office, they hired Flemings, which they're now part of JP Morgan as well. And then obviously they hired the Squid. So my colleagues in Asia said, I don't like the idea of working on this. And I got sent out to Hong Kong, 24 hours notice. Ended up staying for that period 5 years. And that project was extraordinary. It was totally immersive for my first year in Hong Kong. And I'd barely been to Asia before arriving there. I just had no idea what to expect. But it was amazing. And it's funny enough, we had just assumed that this 10% of the market would just be sold down, bunch of block trades, maybe a few exchangeable bonds or something like that. And, we'd heard this rumor that the Hong Kong Monetary Authority were really interested in the idea of something that was new and fangled called an exchange traded fund, an ETF. Not having any of that nonsense. I mean, who wants to buy a passive index tracker? This is Asia, goddammit. Who wants to do that? Anyway, when it turned out, we got there, they were deadly serious about this ETF idea. And so for 9 months of this fully immersive project, we were working on, a full, retail offering with advertising, with Taiwanese pop singers, and doing retail TV ad campaigns and things like that. And none of the team at Goldman, Barings, or Jardine Fleming thought that this thing was going to work, right? We were literally just sort of going through the motions, enormous amounts of work. But we were so wrong. Ultimately, listen, 2 things happened, right? These guys are super smart. One, they probably understood the Hong Kong retail investor better than anyone else. And so this was an index tracker, but it was the retail incentives used basically bonus shares, provided you held on to. I've still got the ad up on the wall. You've got loyalty bonus units. You've got 1 unit for every 20 shares that you owned after 1 year, and another for every 15 shares after 2 years. So it was just a massive built-in discount on the index, and they were selling a further front-end discount at the front. And so, this was a gift for retail anyway. We ended up selling about $4.5 billion of this ETF, and it still exists today. It's still enormous. And then obviously, discount to a liquid futures contract was, a gift for the ARBs in the hedge fund world when the IPO came. And then much more cleverly, the tracker fund had a tap mechanism, because obviously $4 billion was just a chunk out of the 10% of the market that they owned. But there was a creation mechanism set up whereby anyone could create units at the futures exercise and alignment settlement price. So what it meant is that you could create more ETF units at a discount to the market on any day that the market was rising, right? So if a market rises steadily during the day, the exercise and alignment settlement price for the futures is comes in at sort of, 60, 70 basis point, on a 1.5% up day, which is not unusual in Asian equities that time. That was, they ended up sending billions of dollars of this stuff. Only on up days, only works on up days, but anytime, and it didn't put a lid on the market, but it just ended up being a genius solution. But what was so funny is that literally until the retail numbers came in, we thought we were preparing a sort of post-mortem for the monetary authority in terms of how the deal was going to go.
So up until those numbers come in, A, you're not convinced it's going to work. B, are you worried that this is maybe not a career ender, but like a black eye on the career? Was there any fear of how this would go down for you afterwards, if it didn't work out the way it did?
Well, yeah. I mean, it would be a really, really grim way to end a year of incredibly hard work. But how old was I then? I was sort of in my late 20s. I probably wasn't overthinking it, right?
Right.
There'll be
another trip.
There'll be a plan B, right?
Right.
Because they still own the stock. We've got to do something with it. And I think we actually thought, okay, they're going to come round to our way of thinking.
Right. Eventually they'll realize we're the smart ones and they'll come back to us.
Exactly.
Okay.
And instead they comprehensively proved that they were the smartest people in the room, which is, by the way, every time certain sort of loudmouths in Texas start talking about the Hong Kong dollar peg and are wrong again, I cite the fact that the Hong Kong Monetary Authority was easily the smartest client I ever had.
Yeah. Okay. So now when they're right and the market validates that they are correct in this, do other people at Barings or elsewhere think you guys were really smart because you went along with this? Was it just, what's the treatment like after this?
Absolutely. We were geniuses.
Okay. You're the outside the box geniuses. And you took all the credit.
Absolutely.
As a late 20-something should do when in Asia.
Absolutely. No, but the worst thing about it is that we then had a load of other governments around the region that wanted to do the same thing. I thought,
do that for us,
oh my
please.
God, I'm going to make my life in ETFs. Now, you say that now, and ETFs, there are more ETFs than stocks in the US, but tracker funds. It's a bit out there in the 90s.
So what happened? Like, what happened after that deal? Do you start doing this for other countries too? Yeah. What happens next?
I'd got the Asian bug, and I stayed, and I then went back to Europe in the early noughts in 2003. By that time I was working for America. So after the HKMA deal, I got hired by Salomon Brothers, and I moved back to London with what was by then Citigroup, because as I'd started as a corporate financier, and then ended up sort of in capital markets, and then at the sort of more structure-y end of capital markets. I remember sitting down, and I was still at Barings at the time, and the Taiwanese sales girl walked up to, and it was great. In those days, the capital markets desk was on the trading floor. The Chinese wall was a couple of pot plants on the front of our desk, and the fact that our monitors faced against the wall and we looked out. And so it was perfectly normal for the Taiwanese sales lady to come over and say, "Rip, can you have a look at this term sheet?" And it was for a Taiwanese tech company that appeared to be raising money through a convertible bond with zero coupon and zero yield to maturity and a 30% premium. I looked at it and said, "What witchcraft is this? How is it possible?"
Shall we burn her?
And I mean, it got my mind sort of spinning and going, okay, I really need to understand what's going on. So this looks like financial alchemy to me. Okay, how can this tech company raise free money? And this was my introduction to derivatives and an introduction to convertible bonds. And actually the next sort of 10 years of my life was much more in the structured end of the market, which is completely bizarre for someone with my background in French and Spanish literature. But I think it was really down to being it's interpreting skills. I mean, I don't know how much time you ever spent on a derivatives desk anywhere in London, Paris, London, New York, or Hong Kong, but pretty much everyone speaks French, right? The maths training in France is such that virtually all the quants come from there, and so being able to speak to the quants in their own language was probably quite a helpful part of that. But anyway, so that was my introduction to derivatives, and ended up doing lots of convertible bonds. And when I moved back to London, I was doing convertible bonds and corporate equity derivatives, sort of all of the nerdy stuff, which I was fascinated by, and I wasn't a PhD quant myself, but my job was to explain the structures to corporate clients in a way that wouldn't terrify them, and in words of, in simple language. And so I was, if you like, I was a go-between or a translator for the product.
Literally the note I just wrote down in the margin was translator, because that's being able to navigate that. And it's really funny though, the French language thing on the desks is something that I've wondered about. So it's interesting to hear you actually legitimize that assumption of why that's there. So This is we're now into what, like 2003, 4?
So I'm back in London, 2003.
Okay.
And I mean, it's a terrible career decision because China went liftoff, right? So
Right.
I left Hong Kong at about the time of the SARS epidemic, right?
Yep.
And I remember coming back to London to meet my new bosses in Canary Wharf, and the head of trading wouldn't shake my hand because he was worried about this sort of terrifying Asian bird flu that could be on me that I brought over from Hong Kong. But things were just beginning to brew, right? I mean, so my first tour in Asia we were still very much dealing, there was plenty going on, but we were dealing with the overhang of the 98 currency crisis, of the Asian financial crisis. But, obviously China joined WTO in 2000. The China business in the late 30s, so the mainland China business in sort of 1999, 2000, 2001, it's pretty small, right? I was much busier in Korea, Taiwan, Singapore, Thailand, and India than I was in China. But what was taking off just as I was leaving just turned into this absolute freight train of a bull market in China between 2003 and 2010, which is when I went back. So from a sort of career asset allocation standpoint, monumental fuck up, right? I should have absolutely stayed put in Hong Kong in 2003. Life changing would have been, but I had a great time there, and coming back to London for all, when you get offered a job back in your home country, so geographical mobility was such a big deal when I first joined into finance. If you joined a bank, you'd expect to be posted to New York or Hong Kong and come back. And by the early 2000s, that was all beginning to shut down. They stopped all of the expat packages, right? If you wanted to work in Hong Kong, you got hired as a local employee in Hong Kong. All of that stuff got shut down. It was seen as an unnecessary expense. Jobs were getting localized, etc. And so to get offered a seat back in London, you kind of had to take it, because that would be probably the last time you'd get the nod, and to go back. Otherwise, you'd probably have to move firm. Anyway, so I went back, but with hindsight, it was a massive mistake, because there are no words to describe how hot Asian equities were for the next 7 years. And then being back in London in the noughts was interesting, but I was doing much more sort of developed market, sort of corporate equity derivative stuff. There was a lot less buccaneering going on. And then we had the financial crisis. And now I remember in the spring of 2007 going to a Citigroup Equities Managing Directors Conference in Orlando, right? And just to give you the concept of scale, in the equities division, I think the number of managing directors numbered something like sort of 250. This is all managing directors in the global.
Just a few. Just a few.
This was an enormous conference hotel in Orlando, so next door to Disney World, and I remember going, and the keynote speaker for night one for the sort of gala dinner was a guy whose name you'll remember, Tommy Maharis, and he didn't show up. So he showed up the next night, and said, "I'm really sorry I couldn't be with you guys last night, but I was closing a deal, and we've just acquired this mortgage originator somewhere. I can't remember which one it was." And he said, "Actually, you know what? We didn't acquire it. We stole it." And I remember thinking, I'm not sure I can stick around here much longer. This just all felt really wrong. Anyway, I got headhunted about 4 months later to help Jefferies set up a capital markets business in Europe. And so I've already talked about the worst asset allocation mistake in my life, but the best asset allocation trade I ever made was to convert city restricted stock at the old money equivalent of $500 a share into Jefferies stock in the summer of 2007. And actually, Jefferies ended up having a very good financial crisis, if you remember.
Right.
That, you know, they as Goldman Sachs and Morgan Stanley became bank holding companies, Rich Handler moved his financial reporting year to November, which is where the old investment banks used to be, just to show them. And so now we always get the Jefferies results a month before anyone else in the finance sector, and that was Rich underscoring the fact that he was the only investment bank not to take top.
Yeah, remarkable. So you go in 2007 after being headhunted. So we're pre the crisis rolling off, and they want you to build this ground up, like nothing exists.
And there was a kind of a sort of MacGyver garage full of bits and bobs and sort of teams and franchises, and but yeah, it was really good fun. It was really good fun, but you know, ultimately, what was inescapable was the financial crisis, and you know, while you know we were having a good financial crisis, you know, you can't eat relative, ultimately, and actually, I think just culturally, what was so difficult was that, yeah, if being in finance in 2008, I mean, I when did you start your career, Matt? But I mean, you know,
a couple years before that. So
yeah, you know, I was sort of tell this story. So the hatred towards our industry was so intense in Europe and the UK that you could be a bank clerk, right, working behind the teller, and you were part of the problem, right? So, you know, even if you're in the business of capital markets, raising money for corporates so that they can hire people and grow, it didn't matter, right? It was, you know, it was a universally reviled sector to be involved in. I think in the States, you know, it was okay to be in finance provided you didn't work at Goldman, right? In Asia, in Hong Kong, oh, they felt sorry for you working in finance because all the money's in real estate. But no, I'm being slightly flippant there. But I got very homesick for Asia during financial crisis, and I ended up getting rehired by Citi to go back out to Hong Kong.
How long do you do Jefferies before you move
3
over
years.
there?
3 years.
Okay, and really did you stretch the crisis and the beginning of the recovery there? That EM rebound, were you there for part of that?
The big EM rebound was really an 2009 story.
Right.
And so I got back out to Asia for the tail end of
Okay.
that.
That's what I was curious about. All right.
Yeah.
But
So
that's the move right in there, 2010-ish.
2010. So
Okay.
summer of 2010, I went back out.
What's that call like? Who's poaching you? How are they getting you?
So
What's the offer?
my old boss in London calls me and said, "Do you want to come back?" I said, "I wouldn't mind coming back, but I don't want to come back to London. I want to go back to Asia."
Yeah.
And they said, "Well, listen, that's not why I called you, but give me a day or two." And I got a call a couple of days later saying, "This is the seat. Do you want it?"
So what's the seat? What do they offer you?
Running equity capital market syndicate in Asia.
Okay, so now a syndicate job.
Yeah. So I it's funny. I mean, when I first started doing capital markets deal, as the capital markets banker, you would do everything from writing the prospectus through to briefing the sales force and doing the syndication role. And then, like all things, I mean, actually the concept of equity capital markets only came into existence in the mid 90s when, Goldman invented the term and everyone else adopted.
Sure.
And the idea of a dedicated syndicate team as a risk seat really evolved a bit later than that. And so I was, I was straight into a really busy seat, and I'd sort of remember doing IPOs back in the 90s. IPOs didn't happen at all in the 2000s in Europe. And, you were doing 3 a week in Hong Kong in the 2010s.
Yeah. So this is super exciting.
Yeah, it's really, really busy. And then, and then a lot of block trades on risk. So there's the IPO business kind of looks after itself. And in my seat, you typically only got involved when shit was hitting the fan. The real work was moving large blocks of stock around. And these were, corporate sellers, private equity sellers, things like that.
You got any good shit hitting the fan stories?
What's in that seat? You basically spend all day sitting on the phone with hedge fund managers, right?
Do we have a good shit hitting fan story from that period running syndicate with all those deals?
Yeah.
Come on.
Yeah. So I was thinking about, I've always been, and the way in which I think about risk is I hate being short vol, right? And I think a lot of this is because, I spent so much time in the block trading business, which is a classic short vol business, right? It goes fine most of the time, and then you get absolutely smacked in the face. And sometimes you get to dodge a bullet, right? Just because some spidey sense kicks off, right? I'm not going to take a huge amount of credit on this story, but the way things would work, quite often you'd get called into a competitive auction for stock after the close, particularly if it was private equity that was selling. And it's, one of the reasons I'm still grumpy about that sector is that they were terrible customers. But the call would come in at 4:00, and you've got 45 minutes to come back with a bid for $300 million worth of a Chinese insurance company's stock, and the coverage bankers that look after the private equity clients, I typically used to call them the concierges, right? Because it's, ultimately you sometimes wonder who they're working for. They certainly didn't feel like they were working for me. Anyway, and there's very limited understanding of risk. But on this particular day, was when the Swiss National Bank depegged the franc, right? And the news is just starting to filter into the market. And you just have a look at the Swiss franc euro chart from that day. I mean, instantly, 400,000 Polish mortgages had their principal go up by 30%. You know, and I immediately called up the coverage banker saying, listen, we're not going to bid for this. And she says to me, what do you mean you're not? These are really important. This is a really important plan. I said, I have absolutely no idea how many of the hedge funds that I would call to sell this stock exist anymore. And as it turns out, it was only, I mean, I think the most high profile victim of that depeg was Everest Capital. But they went from being a sort of $5 billion fund to zero overnight, right? They'd been picking up too many of those pennies ahead of the steamroller. But, you know, it's eventually sort of, I negotiated with this coverage banker, and we put together a bid to miss, or deliberately wide.
Yeah.
But it's you know, that was the day job.
So you survived this day job, and I might have this wrong, but you have another interesting suitor come knocking on your door for a job. Do you end up at the Squid sometime in this period?
Yeah, no. I went from Citi to Goldman.
How's that happen?
Well, it's funny. I obviously competed against Goldman throughout my career, and you know they were always there for the big title fight, right? You thought you'd develop this great relationship with a really exciting new issuer, and you're just about there, and then yeah, we're going to do one final beauty parade, and yeah, Goldman's coming to sell their wares too. I think I was beginning to fall out of love with the industry, and beginning to think about, you know, what I should do next. You know, I'm in my mid-40s. You know, what comes after all of this? And I get a call from Goldman, and I go, okay, what if it's not the industry, it's just the seat, and you know, and I've got an opportunity to sort of go and work for, you know, it was like getting a seat at Ferrari, right? If you're a Formula One driver, you know, I mean, you could argue that Lewis Hamilton had nothing to prove, but actually, yeah, being the number one driver at Ferrari is still something in the sport that he hadn't done, right? And so it was as simple as that. And I pretty soon realized that, yeah, it was the industry. And actually, you know what, that once you look inside the tent, it was a bit of a Wizard of Oz experience, actually. You know, I thought I'd worked at a lot of dysfunctional organizations until I went to Goldman.
Why do you think, and there's something interesting that happens, and I hear and feel this, like, especially early 40s, when you make that question of it, maybe it's not this, maybe it's just the seat. Maybe this is, the grass will finally be greener for me. And then you realize it's time. It's time to do something different. What's the end of that tour of duty at Goldman look like for you?
It really only took me about 3 years to realize it was time. And my first move out, a great friend of mine was in independent research, a guy called Paul Craig, and he ran he'd had a macro fund of his own, and then started independent research when his fund closed. It would have been, you know, shortly after the GFC. And the research product had a model portfolio, and you know, he'd sent me his research for years. We were great mates. We were hiking buddies, and I'd always said to him, listen, why don't we try and raise some money off the back of this model portfolio, and get you back into asset management, but do it in a way whereby we wanted to explore ways of making the fund an output of the research process rather than, almost like, this is not, the process is not changing at all. The model, the process of preparing the model portfolio, it's just that we're giving people an opportunity to put money behind the idea, and it would be a completely sort of outsourced, we'd literally get, a trustee to just copy trade the model portfolio. And we thought this was an interesting idea. That was something that you could, this is before people started doing funky things with ETFs. So this is 2013. Oh, no, sorry, what am I talking about? 2017, right? And the rule changes that allowed people, investment banks were writing swaps on model portfolios, but taking all of the economics. There wasn't a way that you could do what someone like Bob Elliott's doing at Unlimited Funds in terms of putting together hedge fund product in an ETF wrapper. So I mean, we were kind of slightly ahead of our time on that one. And this was Trump 1 in 2017, and it's funny. I remember touring the Midtown hedge funds in late 2016, and the Make Volatility Great Again versions of the MAGA hats were floating around. In fact, it was 2017. I remember. Oh yeah, it was the head trader at none other than Mr. Scott Bessant's fund that had a bunch of Make Macro Great Again hats made up. It's Mike Gemino, I think he still runs trading at Key Square. And actually, it turned out that 2017 and Trump 1 was one of the most catastrophic years for macro. All the anticipation of tape bombs and awesome trading opportunities turned into a really low vol grind, and no one made any money that year. Anyway, during 2017, or during that 12-month period, it was pretty clear that we weren't going to be able to raise, a viable amount of AUM. And I then got a bizarre call from an old client who said, one of my portfolio companies is an electric car company in Shanghai. They're going to be doing fundraisings and IPOs, etc., over the next few years. Would you think about perhaps going to join them? And I became the chief strategy officer of a car company in 2018, which was a really amazing experience. Actually, it's fascinating.
Had you ever worked in all these experiences?
I've never had a real job, Matt. I'd never had a real.
Yeah. You were just pushing paper around.
I was just pushing paper around for.
Okay, well, what was that like to have that experience for the first time at what, mid 40s at this point, right?
Absolutely phenomenal. And I learned so much so quickly. I'd always been a product guy throughout my career. And so I'd be working on an insurance deal one week, a pharmaceutical deal the next week, an industrial deal the week after. And, I got very good at getting to the FAQ, numbers 1 through 25 quite quickly. I get to a inch deep and a mile wide really easily. And what was so much fun was working in a single industry. And I need to understand about battery chemistry. No, I really need to understand how an electric motor works. And oh my God, these auto analysts don't know much about my industry, and they work on it full time. It's just all of these sort of, Wizard of Oz type moments. And this is I guess this is where we get into a sort of a China point, which is there's so much lazy thinking about capitalism and socialism and communism. Capitalism in China is a full body contact sport, right? I was working at a car company. Actually, you can see it over my shoulder, Matt. There's one of our cars just sitting on the top of the bookshelf.
On the top there, the little white one,
EX5. And we had two factories, right? We had we had 2 models on the road. At the time I joined, I was one of several hundred electric vehicle startups that were going on in China. We were definitely top 10, but the company ended up finally going bankrupt 3 years ago. But be under no illusion, right? Yes, there was a supportive framework around Made in China 2025 that encouraged local governments to support and foment the startups. And actually, the 2 factories that we had were built with local government support, but those local governments still own a car factory, right? So, we had to make a success of it. And, they're very happy to have 300 entrepreneurs throw their hat in the ring, and they're very happy for 295 of them to perish on the vine, right? And that is, it's a totally topsy-turvy way of thinking, which I think is just so much more effective. Whereas if you look at, industrial policy in the West, it's all sort of consumer incentives, sort of bribery at the back end. It's not getting sleeves up involved in the risk assets around sort of plant and equipment, which can be repurposed. Doesn't really make sense. If you think about that model, if a local government says, yeah, I'll build you a factory, right? And, I will get tax revenues from this factory, but, if you can't make a successful business of it, I'll go and get that guy over there to come and make his cars in it, right? I think that's actually a pretty sound model.
So what do you learn from that? What do you learn?
And from the point of view is, in capital-intensive industries, who's got the lowest cost of capital?
Yeah,
the government. Not venture capitalists, right? Taking venture capital dollars and building car factories is fucking insane.
Yeah. Yes, it is. Was that the closest you had ever been to that? I mean, obviously in work, because you actually have the factories and the local involvement and all the other things. Was that the most, I don't want to say the other stuff was abstract, but there's something extremely tangible about what that project must have looked like as a strategic advisor or consultant.
Yeah, it was, in a way, I was an investment banker that had gone in-house, right?
Mm-hmm.
So to try and say it was dramatically different from my old life would be wrong. But it's a very it feels very weird going to industry conferences as a corporate, having hung around them as a banker for years. And I remember going to a big auto conference in Detroit to go and to go and sell my wares, to any investor that would take a meeting with me. And this was at the time where R.J. Scaringe of Rivian was the belle of the ball, right? This was when God, he made my life miserable. So in the space of, it must have been 3 weeks at the beginning of 2019, he took in $400 million investments from Ford and from Amazon, right? At astronomical valuations in the private market. And at this point in time, he just had, he had a few prototypes, right? And a brilliant marketing team had got people to drive them down to Tierra del Fuego, and it was all form and very little content at the time. And my chairman used to call me up and said, Rupert, I don't understand. We have the factories, and we're making the cars, and how's he getting all these tech companies and Ford to give him money at silly? Why can't you do that for me?
God,
it was a nightmare.
Yeah.
Because he was a classic engineer, right?
Right. Yeah.
It was, and he was, this is completely illogical. And
welcome to capitalism.
Well, listen, we are living in a world of Bitcoin treasury companies, for God's sake. Ultimately, that was just the very beginning of when everything was going really crazy in terms of stranger things happening in markets. But ultimately, the thing about car companies is that, and particularly car companies in China now, if your latest model is more than 18 months old, and it takes hundreds of millions of dollars to develop and tool a new model, you're effectively a shark moving backwards. And and we became one of the many hundred to perish on the vine. And ultimately, it was all about missed opportunities on the capital, right? We very nearly became part of that US SPAC boom in 2020, but my boss was asked by the mayor of Shanghai to make sure that he listed on the new, what was called the Starboard, which was going to be Shanghai's new sort of NASDAQ. And that was politically a smart thing for him to say, right. Yeah, that's, of course you should do that. But 6 months later, the CSRC say, listen, we're not approving any more IPOs. It's funny, the IPO system in China has such an impact on money supply because of retail oversubscription. It just sucks trillions of dollars out of the economy when there are hot IPOs going on, that occasionally just think, listen, we're going to have to take a 6-month pause because the monetary system can't cope.
Can't handle this. Oh my God. So
anyway, and that was enough. That was enough to put a bullet in us. That delay.
When do you leave? Do you leave China? Like what? Walk me through what happens next, because we're getting closer to today finally.
Yeah, we are. This was so we then had COVID, right?
Right.
And so my last sort of 18 months of working was no longer weekly commuting to Shanghai. I was doing my job on a webcam.
Mhm.
And obviously all of our lives change when you get handed back God knows how many hours a week from not traveling, from not going to physical meetings to, all of a sudden I found myself having plenty of hours to devote back to markets, right? And I started writing, a week. What started as a WhatsApp chat turned into me writing up my thoughts in a weekly blog, which was literally a PDF attached to a WhatsApp group. And at that time, my now second wife had moved back to Australia, and I said, you know what, I've got a few. I start a few consulting gigs, and I thought, okay, I'll move to Australia, and this writing part became a bigger and bigger part of what I was doing. The companies that I was advising, weren't getting any closer to going public because there wasn't an IPO market. And suddenly I found myself, writing more and more. And people said, well, why don't you make this broadly available? And that's kind of how the Squirrel was born. When I moved down here, I knew that I didn't want to. I mean, the investment banking market, I didn't really want to go back into investment banking, but two, it's very particular market, the Australian market. It's one, incredibly overbroked and overbanked, and two, everyone in this market has done it from cradle to grave, right? So it's a very closed world, and even the Australians that work abroad typically find it quite hard to go back into the industry when they get home. And actually, you'll have noticed I write very little about Australian
Right.
equities and Australian markets. I mean, there are too many people looking at it, right? And you've got the jumbo, the jumbo mining companies and the banks at one end of the spectrum, not desperately interesting, and then you've got the crazy Vancouver style resource plays at the other end of the spectrum, and then when anything happens that's vaguely interesting in the middle, right, it just gets bid up to a stupid multiple so quickly that, you just need to look elsewhere. But it was through that process that the Squirrel was born. The fact that now publishing independent research does not require hiring a web designer, hiring someone to do all of your email compliance and stuff like that. It's a much less daunting process. So technology is just completely enabled on that front, and Substack is an extraordinary platform for that.
Do you feel like this will be 3 years ahead? Hunter calls you again. Says come back to China. Like, I don't want to say is this it now? That sounds dark in some way, but
that was the name of Bob Geldof's autobiography.
Oh yeah,
is that it?
Is that
and
it?
it was a reference to teenage drug taking, I think it was.
Yeah.
Is that it? This is the job that I wonder why I didn't start 10 years earlier.
Right.
Which is, I don't think you'd have wanted to start it much earlier than that in my career, because I wouldn't have as many stories. But it's a pleasure, right? In a way that markets are fascinating, right? And writing about them as an observer is, actually probably more fun and more interesting than some of the stuff I was talking about in the war stories.
Well, there's something about the practice you get from the war stories, from fighting in the wars, that make you a more interesting observer. And I think getting some of these backstories is helping me piecing that together. How do you think about that from being an observer versus being in the war? Like, it's a cooler heads prevail? Is it just better perspective when you're not in the middle of the trenches on a deal?
Well, it's pattern recognition. Ultimately, it's really, really difficult to see the wood from the trees when you're dealing with competitive pressures. Oh my God, is Morgan Stanley going to win this one off us? It's very difficult sometimes to get perspective. And I've got all the time in the world for perspective these days now, which is fantastic. And I enjoy. I mean, going back, I reveled at being a specialist for a few years, LARPing as a car expert. But I actually love being a generalist. I celebrate generalism. And last weekend I was writing about feeder cattle. The previous weekend I was writing about SaaS companies. I was looking at the weekend before that, I was looking at rice combine harvesters in Japan. I love going anywhere. And I do think that bringing fresh eyes to new situations often gives you an advantage over the people that are in the same sandpit every single day. If all you do is trade sofa options, right? Yeah, you're really good at trading sofa options, but someone that's coming to the pit new, they might be they might be an idiot and get immediately fleeced, but they may well be coming with a fresh perspective that gives edge.
They certainly might notice something in a way that you haven't even considered before, and that's a really profound and powerful thing. Also a practice skill. I wrote a couple of notes down. I want to take you through a few of these before I let you escape and go to your day and my night. This idea from the family, and I'm just curious, the story about the restaurant was really cool at the beginning. And I think part of why it was so cool or interesting to me is this theme of, I'm saying hospitality. I'm saying hospitality and this idea of the stockbroker thing didn't feel right for it was stepdad, I think, right?
Yeah.
But hospitality in the restaurant and learning how to dial that up, there's a connection there between the way you take care of and treat clients and take care of deals. Did you ever think about that through line between like the hospitality you learned around those industries or even just waiting tables and working in kitchens?
I mean, investment bankers, it's very similar to the maitre d' in a restaurant, right? It's very similar.
Almost the same thing in many ways.
Almost the same job. But ultimately, entertaining, looking after people, right? It's a sort of common life skill. You can have the best ideas in the world, but if you can't communicate them or be interesting enough for people to want to hear them, those ideas probably vanish on the vine, right? And so, I spent quite a bit of time, for my sins running the graduate recruitment program for Citi. Where I made one too many complaints about interns and got delivered with and got rewarded with running the program for a couple of years. But I used to reach for CVs that had waitering and waitressing experience on them. I used to run at those ones. I think it's a really important skill.
It's all about those relationships. I was fascinated by this idea of you doing the research. I think you even put it together after same time I was writing it down. Casablanca to Calcutta. Just, man, getting to see these. It's a different way to see the world. To see the world not just from travel, but travel with the capital markets overlay. Do you think when you're traveling and you have that different awareness of how those local markets actually operate, does that change the way, like when you travel today, do you look at the places that you go with a different set of eyes than you think you would if you were just traveling through?
Oh, definitely. But I mean, what's different now is that everything's become much more uniform, right? The idea that as a retail investor now, I can buy an Indonesian bank stock, right, on my phone. When I entered the industry, that is just preposterous, right? Institutions needed to jump through hoops to get access to own Taiwanese stocks, right? Forget about it as a retailer. So the world's become a much smaller place in finance, and you've got Indian retail investors trading 0 DTE options on the Sensex these days, right? We are not in my stepfather's stockbroking world by any stretch of the imagination. So the market from Casablanca to Calcutta doesn't look so different now as it would have done 30 years ago.
Yeah, right.
30 years ago.
Just like the same way Main Street or High Street or whatever is kind of looks the same in all these cities too. I hadn't really thought about it that way. That's really interesting. We talked about you as a translator, which I love this idea, especially because the worst translation ever is you saying that the MacGyver garage of bits and bobs. We didn't even get a duct tape in there. Is there an alternate MacGyver universe where he only has bits and bobs to unplug those time bombs with? That I want to know. You talked about Besant's guy with the make macro great again hedge fund and the make volatility great again. Did you get any good hats? Are there any good hats back there?
I think. Obviously, there's a blind squirrel beanie.
Oh, naturally.
Thing about being a perennial expat, Matt, is that I declutter. Regularly. I've got a make volatility great again hat.
Oh, you do have one of those.
But this is a 2024 edition.
Okay,
that was my buddy Ben Bry that gave me that one. But I don't have the Scott Besant make macro great again hat. Well, I'm pretty sure that was made for him by one of his brokers.
I would say that was probably a gift. Good hospitality, though. Good hospitality.
But I'm pretty sure that was the Goldman cross asset desk rather than him dipping his hand in his own pocket.
I wouldn't be surprised by that. And I'm going to be thinking about this one because I made this note to myself. The Guns N' Roses comeback record, Chinese Democracy, possibly could have been called Chinese Capitalism. You talking about that as a full body contact sport as a leader? That's really... Why don't we talk about that stuff enough? Like, why is that not a common, I don't feel like that's a common conversation.
Listen, I often feel that the West has got capitalism all wrong. I mean, you've got capitalism is embraced on the upside, but socialism that's embraced on the downside. Too many losses are getting socialized. Right? Silicon Valley Bank just says it all to me.
Right. And if you didn't know that was going to be the outcome at the beginning of the Silicon Valley Bank debacle, whatever you want to call that, if you didn't know that's where this was headed.
Yeah.
Strange 6 weeks that was to watch that story work itself.
Really bizarre.
Yeah. Last but not least, we landed appropriately somehow on Bob Geldof, because how can we not have Boomtown Rats? I need a squirrel subletter, Boomtown Ratatosk. You can close my loop all the way.
That is good.
All right, I'm looking for that one. Rupert Mitchell, people want to find you, bug you on the internet. Where should they look you up these days?
Really easy, Matt. Blindsquirrelmacro.com. And I sort of lurk on the socials from time to time. I'm at Squirrel Macro on Twitter. I'm still Rupert Mitchell on LinkedIn. You spend more time there than I do, though, but
somebody's got to tell people about these silly podcasts.
I just keep on getting fun run updates.
Yeah, well, I get plenty of those too. Suffice it to say, check out Blind Squirrel Macro. You want to subscribe. I love the macro overviews. I love actually, this story gives me the background of why you can do, like Kevin Weir, the macro tourist thing of bouncing around all these markets, actually having interesting insights to point out, and then just great stories. I use them at work all the time. I use them with friends and family. And you do such a good job of making it clear, concise, and interesting to read without turning it into some like doomer, bear porn, horrible, like miserable thing. I like seeing them in my inbox. That's a long way to say, Rupert Mitchell, you are truly an intentional investor. Thanks so much for joining us today.
Matt, thanks so much. Loved it.
Thanks for tuning in. Be sure to like, share, and subscribe wherever you're watching The Intentional Investor so more people can find our show. You can follow Matt directly at cultishcreative.com or at cultishcreative on Twitter. For more great content at the intersection of investing and life, check out epsilontheory.com or at epsilontheory on Twitter.